Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at gold and only gold today. I normally look at gold and silver together. I will get back to doing that, but I'm going to need just a little bit more time to go through what I want to go through on gold today, as we're going to be looking at a simplified chart because I'm currently in the process of purging my chart list. Now I do this every 6 to 12 months where I just build up so many copies of things that it just gets too much, and I have to strip away a lot of the chaff, get my charts simplified, get them regrouped, reorganized, and try to do as much work as I can on one chart. Otherwise it just becomes too much of a headache. I've done that here with gold. I'm now in the process of doing it with silver, and therefore will present silver to you as and when I get the opportunity to do that. If it isn't done on its own within the next week or so, then it will be represented alongside gold as the two back together, as I normally do once I'm ready. So without further ado, let's get on with it. We're here looking at the Elliott wave count, my simplified Elliott wave count on the daily time frame, looking at gold. We can see everything from 2012 on the left hand side of the screen to present day. We're concerned with the current count over here, and we're going to dig our way through all of this and try to figure out what's going on. But first of all, let's just get rid of all the labeling for a moment, because I want to look at things in a really simplified way. So I'm just going to drag this into the levels bucket. There we go. Is that now in there? Yep. Okay, so first thing I want to talk about is some basic market geometry, right? So we've been saying that this is a 1, this is a 2, this is a 3, this is a 4 that we're in. So what can we use to express that? Well, you know, I always like to use my channels and my pitchforks. So the first pitchfork I want to look at, that's the wrong one, let's switch into log, is this one here. So this is framing the market off of the wave 1 and the wave 2. You can see how, let's just switch into the more complex version of it. This one. Okay, so inside of this pitchfork we can see, having set our swing high, swing low, we tested the 61.8 level, tested the outer bound, came back to the 61.8, tested it, came through the 38.2, back tested it, fell through it, tested the 61.8 again, through the 38.2, back tested it again, to the median line, all the way back down, all the way back up to the median line, to the 61.8, and then we had this big correction, where we don't seem, bar maybe a touch on the 61.8 here and the 38.2 here and this area here, we don't seem, and the back test of the median line, sorry, but generally there's some relationship to it, but it's not incredibly strong. Okay, but it's obviously providing support, and it's obviously working in the way we'd expect the pitchfork to work. We seem to have come down roughly to the 89 level, purple line, and bounced, but it's not particularly strong, that relationship. But I'm happy to say that this does look like a 1-2 and this looks like a 3-4. So that's the pitchfork in log. If we look at it in linear for a moment, we can still see that we get the levels being tested along the bottom of the pitchfork here for support. We can see that quite clearly. Okay, we still get this 61.8, although it's not as clear. We get this bundling between the 38.2 and the 61.8. We get a test on the pitchfork here. All of this area here is a little dodgier. Test on the 61.8, 38.2. Break out of the pitchfork, break down, and then hit straight to the 50 here, where we bounce. But you can find support and resistance looking at it in log or looking at it in linear, but it's definitely applicable in both ways. Now, in linear terms, if we just come off of the brush and bring apart indicators for a moment, doing a bit of combined analysis today, because like I said, we're having more of a general rethink of what's going on than we are obsessing over the minutiae. So let's just come out to the weekly time frame for a moment. So 1, 2, 1, 2, 3, A, B, C, expanding flat into the 4. So this here represents the 3 of the 3. So let's just slap on a horizontal, a vertical, excuse me. And if we just get a horizontal on the RSI here, and we just pick out the top of this peak, we can see that this is the highest peak higher than everything before it, higher than everything since. This is the 3 of our 3. That's great. That convinces me that this is a 3. We break out of the channel. Now the breakout of the throwover of the pitchfork here is also confirmed as the top of the wave 3 with the MACD peak here as well. So here's the peak of our 3 in the MACD. Here's the 3 of our 3 in the RSI. And if we just pick out the horizontal on the MACD, you can see it's clearly the highest peak. So more confirmation that it's the 3. It breaks market structure. Not doesn't go to the extreme, but it breaks out of the primary pitchfork. It confirms with momentum on the MACD, and it confirms with momentum on the RSI. So this is 1, 2, 3 up here. I'm very confident in that. Never certain, as we can never be certain of anything in this life, but confident that that's the 3. So all of this is the 4. So that looks good so far. So if we just come off of the pitchfork for a minute and we come back into log and we throw up a parallel channel. I just move this up a wee bit to take in these lows. 1, 2, 3, 1 and 3 join together to find the 5. So the 5 will end up here somewhere. Now whether this is a 1, very deep 2, 3, 4 and 5 and we're coming up here like this, or whether we're going to top out much sooner and we come up quicker is all up for debate, but we will find it somewhere along this line most likely. The 4 does not have to come back to the edge of the channel. It often will, but not all the time. But we had a very long 2, slightly shorter 4, and then a 5 to here. That would look like a pretty convincing impulse wave with nice alternation between the waves in time and degree and form. So that looks pretty good. If we come off of log and we come into linear with a parallel channel, then what we see is, this is why it was slightly out of place. If I just drag it down to the bottom of the 2, which is right there, you can see we pretty much touch the edge of the channel. Not quite, but very, very close. And we get this incredibly bullish candle on the weekly. Just extremely bullish candle. Massive reversal candle. It's only a reversal candle if we get a follow through. For example, if we gobble up all of the previous bearish move down here, breaking this 3-wave pivot and going higher, this would be a very strong sign of a bottom being in. Such a strong reversal candle with such a long wick to the downside, several times the length of the body of the candle, touching right at the edge of the channel. So we do appear to be in a bit of a precarious position. We're either bottomed or we're about to break a lot of major support. So if I show you what I mean, let's just bring up some of our EMAs I like to bring up. Now we know that with the ones I use, the 10, 20, 60, 250, the 60 basically coincides in the weekly with what we call the 250 on the daily. They basically represent each other at different time frames. So if we just bring up the 60, you can see how we had a pattern here back at the previous high where we came down below the 60, bounced above it looking quite strong, came back, bounced again, and then we just collapsed, fell below it and stayed below it. So this is the bearish idea for a moment, that this top here is a very similar structure. Very similar structure. So we go, we come down to a pivot, we go across to another pivot, and then we collapse. So if we were to just finish that there, drag this across for a minute, it's not exactly the same, it's a shorter time frame, but you get the idea. It looks like a fractal of this almost. Now I'm not suggesting that's what we're dealing with. I'm just saying it puts us in a slightly precarious position where the gold market really doesn't seem to know exactly what it wants to do here. We're back above the 60 exponential moving average, we've bounced above it again. Right? So now let's come down to the daily time frame, where we can see that we're below the 60 exponential moving average here, and we're coming up to test it. This happens to coincide, if we bring up the 250, with a touch to the tick today on the 250 exponential moving average. So this represents on the day time frame what we saw on the weekly time frame. Down, up, through it, down, up, through it, to the edge of the channel. So to sum up, what I'm saying is it appears to be that if we are bullish and this is a 1, 2, 3, 4, this was the right place to have bottomed, and therefore If we haven't bottomed here, we need to watch out, because we're in a position now which is a bit precarious. We have fallen below a major moving average. We have stretched the bounds of how we can count this bullishly pretty much to the limit, not quite, but very close to the limit, which leaves us in a bit of a precarious position. So I'm still bullish after this bounce, and unless these lows get taken out, the recent lows, I'm going to remain so. But if these lows fail, then structurally this market's getting itself into a bit of a precarious position. It could still go lower and still bounce. I'm just saying, confidence getting rocked a little bit if we go much lower from here. So that's the basic geometry of the chart I wanted to share with you for the time being. A couple of fib levels here as well, so let's bring up these fibs. Right. So we got a 1, 2 to the 61.8 in log to the tick here. So that's a nice wave 2. And we have come through the 23.6, not quite made it to the 38.2 yet. Could come down again. If we look at it in price terms, we've come through the 38.2, so we've done enough for it to be a wave 4 when we're looking at the linear chart. Okay, so I think that's all I really want to show you in terms of the basic analysis here, which I wanted to start with first for a change to try and frame the market, and get an idea of what we're using as our geometry to lay out this 5-wave move. Now, if this had continued to fall down and found the lower low right at the edge of that channel or near the edge of the pitchfork and taken out of the recent lows, this would have made life a lot simpler. Unfortunately, you don't always get what you want. So we've ended up with a situation where we've ended up with 2 counts which are still both valid. This causes a little bit of confusion. So let's bring up the correction we're talking about, and let's bring up our count up to the high. Let's move this out of the way. So let's dig into this Elliott wave idea for a moment. Okay, so what I have here is a 3 pattern WXY. Alright, so the way you can count this is into a completed 4. 1, 2, 3, 4, 5 waves up into a 1. A, B, C into a 2. Violent bounce off of the low. Now, this is an incredibly deep 2. Incredibly deep. Just shy of 100%. But because it's just shy of 100%, it's legitimate. Wave 2 can't retrace where wave 1 began. That's the rule. And we haven't. So, as unlikely as it appears to be, we have to consider it as a possibility because it has not been eliminated as a possibility. So we end up with a possibility of completing the count here, or completing the count here, or perhaps even lower if these lows break. Assuming for the moment that this is the low off of the back of this very bullish weekly candle, then it's either WXY into a 4, 1, 2, and now we're in a 3. If we are in a 3, we will rock it up over the coming weeks and months. We will obviously still have, a wave 1, a wave 2 pullback, a wave 3, a 4 and a 5 to go into that 3 will all develop over the coming weeks and months. So let's just have a quick countdown about how I've managed this. So if we say 3 wave move here, and this looks like a triangle to me all day. So A, B, C, W. A, B, C, flat pattern, this is a regular flat into the X. We then get a flat again into the Y, so we have to call this a combination, double combination, as it's not dividing into zigzags. You could argue that this is a zigzag. Maybe you could argue for 5 waves in here, 3 in here, and maybe 5 waves in here, but you're getting a very deep B for a zigzag. It's still legitimate, doesn't come all the way up, but my god, it's deep. It comes over 90%. So at that point, you're more likely to consider a flat pattern as a B wave, so A, B here, 90% more retracement, 5 waves down in a C. Then we get this 3 wave move here, this 3 wave move here, and this 5 wave move here to complete the 4. Okay, so that's a more bullish way of interpreting it in a simple fashion. We've gone W, X, Y. So let's just have a look at the extensions we're dealing with in linear terms when we look from the W extended to the Y. We come to the 123.6 and we double bottom at it. What does it look like in log? In log it's the 138, double bottom there. So this is a perfectly acceptable extension in this final 3 wave move. Okay, and if we look at what we retrace off of the W, we get a 50% retracement in the X. Now, ideally, we would like to have seen at least one of these retracements to result in a 61.8, but we get a tag here at the 50 and another tag here pretty much bang at the 50. So maybe you could say the X is over here, and this is some kind of 3 wave swing to here, but then you don't appear to have a 3 wave swing to here. It really is at this point important to understand the breakdown of the wave structure, but I've simplified it because making sense of this isn't really relevant to making sense of this at the moment, because this could still be a 1-2. So it doesn't really matter all that much how you label it, because you could just say, well, okay, W, X. If you don't like the position of this 3 wave move here as a completion, you can say Y, X, and another 3 wave move, Z, into the 4, which we complete over here, and now this is a 1 off of the low, and we've just shifted the 1-2 across to here, which will now go 1-2 before going higher. We'd have to then be able to count this as a zigzag rather than a 5 wave, and then this is a zigzag, which doesn't seem too problematic. Series of W, X, Y, X, Z, but I don't think we need to go there, because we can get all the work done in the Y and the 1 and the 2. That is how I see it at the moment. I cannot really offer you any more, because when we were looking at this initial move off of the low and we were expecting a wave 2 retracement, somewhere around here would have been normal, and then breaking off into a 3, but instead we came down so low, and we are now looking so bullish off of this low. You see, if we continue to break down and we've gone, let's argue 1, 2, 1, 2, 3, 4, like that, I'd be right, yeah, this is an impulse wave, and this whole thing's maybe an ABC, or this is the ABC of the Y, and then now we're breaking down. But it just seems to have retraced so much already from a recent high. Where is it? We're almost up to the 78.6. So the only bearish interpretation I could think of is this is a zigzag, but it's not complete. That would drag us to a lower low, and that would support the idea that this is a 4 and this is W, X, Y, X, Z possibly. Let me explain what I mean. So you have an A here in 5 waves, and then this would now have to be a 1, a very deep 2, 3, 4, 5, and then that could complete the 4 with the Y over here, or the W, X, Y, X, Z. But for the moment, I'm going to assume the bottom's in. I can't clarify for you whether it's part of a greater corrective move which is completed very close to the previous double bottom, or whether this was a completed correction back in March and this is a 1 and a 2. So the only thing we're watching here really is that the previous lows hold, because if they do, we can remain with this bullish count of a 1-2. If not, we have to assume that this is still an ongoing correction. Now, I'm not ready to cry foul and say it's bearish, we're going to hell, like I pointed out earlier. The reason is I can't get an impulse wave out of this. Just can't do it. Yeah, there's just no way this looks like a 1 and a 2. This is just a mess with overlapping everywhere. So I can't get that into an impulse wave off of the high. It looks corrective. You know, by any stretch of the imagination, it looks corrective. So let's just frame this for the moment, see what we can do. Now there is one other option I've come across out there, which some people seem to be considering. I'm not a particular fan of it. Just save this. Lock this in place. We'll pop this in our channels and what's it folder. Hide, and while we're here, I'll just slap on what is going to be an extremely flat pitchfork because of such a deep 1-2 retracement. But we'll put this on here and see if we start tagging anything of significance as we go forward. It's possible that we will start to find some interesting levels to look at. But let's just get it lined up with the lows. Okay. And we'll lock this in place. And we'll hide this as well for the moment. Come back and look at it later, and we'll put this in our channels and pitchforks folder. Okay, so finally, the other idea I said I would talk about, not my own. I've seen it at large in general from several people. Let's just hide this level, and this is the idea that all of this is a triangle. Like this, and we've got a series of lows here like this, and that this is a triangle and should be labelled A, B, C, D, E. I'm not going to say it's impossible, I just don't like it, that's all. Reason being is, if you're not an Elliottician, you'll recognise this as a descending triangle, which is considered to be bearish. And if you are an Elliottician, therefore, you would be expecting to see the B and the D on the flat side of what we would call a barrier triangle, rather than on the slope side of it. We would rather see a symmetrical triangle labelled like this. And although we haven't got a perfectly flat, I honestly don't know. I mean, we have to take the two lows here, don't we? This low here, we are just about managing it. We've got to come down a little bit more to take that low in. Maybe you could argue it's symmetrical just, and you got a contracting symmetrical. It's not symmetrical. There's just no sorry. There's no arguing that it's not symmetrical. The two sides are not even, and they're closing in at the same rate. So it's not a symmetrical triangle, but it is a contracting triangle rather than the purest of barrier triangles. So in that sense, maybe this whole thing is a free wave swing, and this is a free wave swing, although it does tend to count impulsively. This is a free wave swing, therefore another free wave swing, followed by another free wave swing, followed by a breakout, and that would be the completion of a 4 over here. Not something I'm particularly fond of. I would like to see this downward trend broken to scrap the idea, and also to take out the previous high here would cancel out the idea of a contracting triangle. But, you know, we'll keep it on the back burner in our minds, just in case it's something to look at. But that's really all I've got for you today, guys. I hope you found that useful. I will hold my hands up and say that, although I'm still using the same count I have for months here, the WXY into the 4 and the 1-2, or the WXYXZ, we've been talking about this for months and months, but this recent price action here has thrown me for a bit of a loop. This is something this kind of price action is something you would expect to see at the completion of a correction. Okay, so this is how you often get trapped, you see. For example, this, if you were so optimistic that this was a short-term move, this was a pretty violent reaction back up as well. This is more gradual, this is more gradual, this was much more gradual. This is very impressive. And from a weekly perspective, we don't really see anything else like it. Such a bullish hammer. We had one here, and this did signify follow through off of this bullish hammer. This is a very strong bullish hammer, so I would expect to see follow through here as well. This has me not convinced, but relatively confident in a bottom. Relatively confident. So all we're looking forward to now over the next week or so, before I come back and look at gold and hopefully silver at the same time, is we're just looking for some kind of follow through over the coming weeks. We want to take out these B wave highs here in the potential ABC, rather than the C completing here. We want to see these B wave highs taken out. We want to see continuation to the upside. We can then become more bullish. We may have just witnessed a very rare but very deep 1-2. And if it's not a 1-2, and it is the completion of the 4, it doesn't matter anyway. The low's in either way. The only way it's not is if we challenge this incredibly bullish candle and take out its low. So that's it. That's what you really all need to be looking for at the moment. Okay, right. So if you're new to the channel, you've liked what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. As always, a great thank you to all my patrons. If you're new to the channel and you want to have a look at what you can get off of Patreon, there's so much available. You've got monthly deep dive videos. You've got access to the public Discord server. You've got a weekly exclusive video which comes out for patrons only. You've got early access to YouTube videos which are released 24 hours in advance, and so on and so on. Plus all the educational content, educational videos and Elliott, which are all available to tier 2 subscribers. All of that's available for just 10 quid a month. So please consider it. It goes a long way to helping. And that's it, guys. If you're not following me on Twitter either, there's a link in the description box below also. Take care, and I will be back with you again shortly. All the best. Bye bye.